What is share market? In simple words, it is where people buy and sell shares. The share market serves as a platform for investors to participate in the growth of companies. When you buy a share of any company, you become a partial owner of that company. So, is share market and stock market the same? Many of you might have that confusion that it means the same, but there is a slight difference between the two. Share market is used to trade only shares, but the stock market allows you to trade various securities such as bonds, derivatives, etc. What are stocks? Stocks simply means an investment method to build wealth. When you invest in the stock of a company, it means you own a share in that company that issued the stock. Difference between stocks and shares. A share represents a single unit of stock, while stocks are financial securities that represent part ownership in one or more companies. It will be clear by the fact that the value of two stocks can be different while the value of each share of a company will be the same.
Reasons to invest in share market. Liquidity. Stocks are generally known as liquid assets because they can be easily converted to cash that consists of several buyers at any given point in time. When compared to other assets, it's more difficult to look for a buyer for some assets like property. Flexibility to invest in smaller amounts. You can start small investments in the stock market by buying stocks in smaller units. Dividend benefits. A dividend refers to a reward which the company gives to its investors. In simple words, it is an additional income of the company for investors that is paid yearly by every company. Simple process. Buying and selling in the stock market is simple and easy for everyone. Buying of stock is done with the help of a broker. Safe and secure. The stock market of India is regulated by the Stock Exchange Board of India (SCBI). It protects the rights of all the investors. SCBI keeps everyone's company on its toes, thus reducing the risk of several fraudulent activities by companies.
The potential for high returns is good, but the stock market can also be risky, with the possibility of losing money as the market can be unpredictable. Always be alert and have a basic understanding of stocks and how do they work, which you will get after watching this video. The biggest advantage can be higher returns in a short amount of time, but it can also be vice versa. How does the stock market work? Businesses use the stock market to raise capital by offering investors ownership holdings. Shares of stocks are the name given to these equity investments. Without any loan, companies can obtain the necessary funds to run and grow their company by listing the shares for sale on the stock market. Corporations benefit greatly with this concept and can expand their businesses efficiently without paying any interests. The stock market works on the demand and supply system. When the demand is more than the supply, the share prices increases, and when the supply is more than the demand, it decreases. Some common definitions. Portfolio. It is a collection of a wide range of assets that are owned by investors. The portfolio includes valuables ranging from gold, stocks, funds, derivatives, properties, cash equivalents, bonds, etc. Bull market. In a bull market, companies tend to generate more revenue. The prices increases and the economy increases as well. Bear market. In bear market, the prices of stocks drops, the companies suffer losses and the economy decreases. Now there are more definitions as well, but if we cover all of the definitions in one video, it is going to be a very long video.
Difference between long and short term investment. There are many types of trading in the stock market, but mainly three are mostly used methods by the traders. Intraday trading involves buying and selling stocks within the same day. Traders need to closely watch the market as the market can be highly volatile and can change anytime. People who do intraday trading are called traders. Position trading is a long term trading strategy that involves buying and holding securities for an extended period. typically from several months to years. In this type of trading, people do not need to closely watch the market every second, but need a full view of the market every day, week, or month. Usually, people who do this type of trading are called investors. Swing trading falls between intraday trading and position trading. In this, the traders hold the stocks for some day, 2 weeks, or even some months. Swing traders require to have great technical analysis ability to identify the swing patterns efficiently without incurring much losses. The stock market offers various types of trading strategies. You can choose the one which suits you according to availability of time and capital.
Time to be spent. It depends on the type of trade that you are suitable with. If you do intraday trading, then you need to spend almost all the time in the market days till the market gets closed. It's very hard to do intraday trading if you are a student, so it's advisable to go for position and swing trades. If you are into swing trading, then you can spend 5 to 6 hours every week to perform swing trading. It's better for students and people who are into 9 to 5 jobs. Position trading is best suited for investors who are willing to invest their money for some years and have no problem in that. For position trading, you don't need to follow the market closely. Rather, you can watch the weekly, monthly, or quarterly analysis. So, how much time do you need to complete the basic knowledge about stock market? Well, plan A2Z is going to attach some free ebooks. Read and understand them, and you will be ready for stepping your foot into the stock market. And don't worry, we'll explain every ebook to you in the upcoming videos.
Is it good to give full time or not in share market? Firstly, we will tell you about the advantages of going full time. There is a potential for higher returns. If you give full time in share market, then you can get better profits than usual. Someday you will be realizing that your efforts were worth it. Flexibility. By giving full time in share market, you are free from other works like jobs, etc. And then you can accordingly set the time in which you want to work in the market, and you can create your own schedule and work at your own pace without any bounding. Autonomy. You can independently take your own decisions with any time foundation or restriction and take good care of your financial future. Opportunity to learn. As you are giving full time in the share market, you are blessed with continuous learning and therefore can improve your investment skills. You will be going to get better and better day by day in the market by this continuous learning. Now, disadvantages of going full time. High risks. Remember, trading and investing are not full time jobs, but they are also highly risky activities where the probability of loss is higher than the chances of profit. You need to position yourself accordingly. You have to face many setbacks and accordingly have to come back. Unpredictable income. You never know when you will be getting profit and when you will be in loss. Share market is not like a job in which you work and you will get fixed income every time you work. There is a possibility that you may not gain any profit for months. Emotional stress. Share market is going to give you happiness and stress both according to the situations. Sometimes you will be getting a lots of profit, but surely there will be some times when you are going to have loss, and this loss will act as an emotional stress in your life, which may or may not be recovered. Requires expertise. If you really want to make profits in share market, then you should be aware that making profits in share market is not a play of children. Rather, it is like a rocket science for some people. Successful investing in share market requires significant knowledge as well as experience. Only experienced investors, risk tolerant individuals, well capitalized investors, and dedicated learners should consider going full time in share market. Beginners, those are new to share market, should invest and gain experience and knowledge before going full time. Those with limited capital and those with other financial commitments should not consider going full time in the share market.